And at the moment, you're not seeing too much speed on the ladder. I don't want to get sucked into what it's doing at 13, 14. I don't care. I want to know what's happening at 12. We've gone through 12, but it's not gone particularly quick there. If you really wanted to sell 12, you did just have a little chance to sell it. But the fact that it didn't slam straight through, that was what I was looking for. And if you don't get that very quickly, I'm thinking, I don't like this. That's part of not getting chopped up, is knowing what you're looking for. And the thing that I think a lot of people get caught up with price ladder is there is a lot going on. It's flashing all over the place, and people feel that this then creates a sense of a necessity to do something. We've just laid out what we want to see and where we want to see it. Anything that's happening in and around or before that, I don't need to worry about from a price ladder. All I'm doing then is just what I call passively watching. I'm watching, I want to get a sense of what's going on, but I don't want to be overly focusing and getting sucked into the immediate sort of jumping up, down, that I'm seeing. I don't need that. I need to know what I'm looking for when we reach either 12 or 26. So let's get on with it. What I want you guys to watch when we go and look at this, because I can show you now what actually happens. This is what happens. We go down to 12. It fails when it gets down there. It has 2 goes at it. And then we go up and you get a clean break of 26 and a move quickly up to 36, 37 area. But what you really need to focus on here, and it's really important to see the ones that don't work as much as the ones that do. Look at the lack of acceleration as you approach the low versus the difference in the way it trades when it gets towards the top. That's the real important thing. Other aspects of this, because we've already defined that this is a scalp, the objective is to get to here. It's not to try and play for the entire move. And it's really easy to get sucked into thinking, oh no, but I should have stayed in. I should have held on. I should have done this. I should have done that. But this is exactly the point where this could have gone wrong. As in, if this was to turn into the rotational type day, this could have been the peak of the day. We go back down and that's it. And we end up trading in this area. So by getting out here, you're giving yourself an opportunity either to have a go if we get a pullback down to perhaps 26, or you wait for more information. And as we then start to form an area of support up here at 43, you can play for that. Yes, you're giving up a few ticks in here, but what you're doing is you're not putting yourself in a situation where you've got yourself a decent winner and then giving it all up only to find you're now in a day that is rotating up and down. So really important, make sure that you apply the tactics that you've planned. Don't get sucked into thinking, oh no, but it could have been so much more. It could have been this. It could have been this. This is a separate trade. The strategy is clear at this point that we are going up, but this is now one where you need new tactics as to how you're going to play this bit of the trade. This is exactly what we're going to go and look at, Mohammed, on how do you not get chopped on these types of trades. So here we go. S&P is on the left over here. The clock will come in just a moment because I recorded this as it was happening. So I've got the clock on there. What you've got here then is the S&P on the left-hand side, and I'll get this going. And what I want you to watch, and this is really important on that idea of not getting chopped in this situation. The plan here is we're going to sell it through 12 if it accelerates, if it's got enough speed. And when I say enough speed, that is relative to the way that it's been trading recently. Here we go. We'll keep an eye on that. I'll try and talk you through everything that is going on. So at this point in time, we're just past the open. There we go. There's the clock. So you're a minute in. So 12's the area that we're interested in down here. And at the moment, you're not seeing too much speed on the ladder. I don't want to get sucked into what it's doing at 13, 14. I don't care. I want to know what's happening at 12. We've gone through 12, but it's not gone particularly quick there. If you really wanted to sell 12, you did just have a little chance to sell it. But the fact that it didn't slam straight through, that was what I was looking for. And if you don't get that very quickly, I'm thinking, I don't like this. That's part of not getting chopped up, is knowing what you're looking for. And here we go. It comes back down again. Another attempt towards 12, touches 12, and straight away bounces. So I'm almost immediately in a position now where I'm thinking a minute and a bit in, this isn't going down. This is potentially going up. And I may have an opportunity to then try and play this to the upside. Now, remember, the other level we're looking at is 26.5. So what we've seen now is quite a clean move towards the upside. 17 towards 20 has been pretty smooth, 21 trades. But look at the pullbacks here. It drops back, 19 area, comes back, and it holds. And unlike that when it went through 12, every time it comes back, it holds. I'm just going to pause it here very quickly, because what we're now getting is, as it says, this very sort of steady movement towards the upside. We've seen it move from 17 up towards 21. It pulled back to around 19. It's pushed on again towards 23 and 3/4. This is different. This is the bit that you're looking at thinking, yes, this is kind of what I need to see. So now your mindset needs to go into, I need to try and get myself long. The already planned out point is 26.5, and that is to then play the break of this high just in here. But you could potentially, based on the way that the ladder is trading, and I'll explain this in just a moment, actually get in a little bit earlier than this. And that's all to do with looking at where it pulls back to. Remember, if you're looking to try and play this up, I'm focusing very much on where does this pull back to and where does this hold. So let's get back onto it then. So trade 24, remember, we've not got through 26.5 yet. So the acceleration is not expected just yet, but we've got this sort of steady momentum, this steady push towards the upside. Notice here, we're now starting to build up volume and we keep falling back to around 23 and we pause. So this is a good opportunity then to jump in. You could buy 23. Now, this is a bit speculative, so you don't want to go in big on this. This would be a one clip trade. So whatever your standard amount is, it's just that. You don't really want to be adding on. And what I'm looking at here then is volume's building up, but it has then just ticked back down. And actually getting out there is not the best choice. That was too easy to have got out. There was no real need to do that. And this does run the risk that you can then start to force yourself into doing something. But again, it's another steady push up. So another attempt to then get in at around about 25. Now, what you've got to be thinking at this point is you're in at 25. 26.5 is the point that matters. If this can push through 26.5 quite easily, we're all looking good on this. We've seen it trade down towards 21. So mentally, I'm thinking, yeah, the stop on this is now at 20, which, yes, does seem a fair distance. But I'm starting to think that the way this has been trading, this is worth being in for, because you've got 11 handles to the upside if this works, and you're going to risk 5. And you could argue that actually you probably have your stop at 21, so you could risk 4 on this. Ideally, if this gets above 26.5, and this is where you're always thinking these things through, your tactics through. If this gets above 26.5, this really shouldn't be coming back then, at which point you're almost in a situation where your stop can be a scratch. So we're up at 25. Your stop on this at this point is going to be around about 21, 20 area. And what I'm looking for is it to push through 26.5. So there we go, 26.5 trades. And note, as soon as it goes through, it traded back to 26.5 and it never ticked back through. So this should now give you a lot of confidence. This is now the point where it has done what you thought it was going to do. It's pushed up, pushed up, pushed up through 26.5. You should now be adding to this trade. So the idea now is we've seen it very similar to what it did at 23. Traded up, pulls back. And this, when it comes to a price ladder, is what I'm interested in. I'm not looking at every tick. I'm not looking at the last, it traded up 1 and then it traded 50 and 20, etc. I'm just looking at the speed of the way it's moving. And crucially, if I'm playing to the upside, I remember being told this really early on in my career, what I care about is support. I don't worry about resistance. I know where my target is. I care about support. Where is this falling back to? And it keeps on falling back towards 28. So I can buy 28. That gives me an average price of 26.5. Now, really, it shouldn't be falling back there. And a good question on the stop. And we'll come back to this. I'm going to talk about stops in a bit more detail. But once you're above 26.5, I can now start looking at this and thinking, well, actually, my stop can probably come to about 24.5, 24 area. And I'll explain why that is in a little while. So you can already move your stop up because you've been given that information on the way that it traded up through 26 towards 28 and the fact that it's holding above there. So we've now got a small stop. We've increased our size and we're still looking up to around about this 36 area. Now, all of a sudden, this trade has become a much, much more attractive trade. So off we go. I'll get rid of some of those drawings. And here we go. Now it's just a case of, you know where this can go. It's just now a case of waiting. 37, 30, well, sort of 35 to 37, depending upon precisely where you want to draw the value area, is the area that you're looking for. Now, it has had a little stall at 32, but that's fine. Back towards 29 again, back up towards 32. This is all good. We don't want to see it stall in here too long, because so far we have seen this momentum where it's pushed up, stalls, pushes up, stalls, pushes up. It's not been doing this sort of two-directional trade, which is what you're seeing a little bit of at this point. Still, not necessarily a reason to want to get out of this. So still not backed off, but order goes in to get out. Order's then deleted as well on the basis that this does look like it's now actually about to go. Realistically, you shouldn't be getting out here. The fact that it won't go again is perhaps a reason to cover a little bit. Now, that's a debatable one, and there's no perfect trade. And this is why I did this one as it was happening. So I couldn't sort of go, look, this is absolutely perfect. You should wait for it. At that point in time, I was thinking this could rotate back to 26 and I can buy there. But it comes back to 30. It holds 30 again. Remember, where is it finding support? Back to 30. You should add there. And then we push on straight through 32, 33. This is now on now. You're thinking, yep, 36 is definitely on the cards here. Wait for it to happen. It's coming. It's coming. You've got an offer already at 39. I always have an offer slightly higher up in case this rushes. If it rushes and hits 39, wonderful. If it doesn't and it gets towards 36 and it starts to stall, then we can get out at 36. So we're still seeing it tickle along. Again, I'm not sort of worrying too much about this. I'm looking at where it's supporting, and every time it pulls back, it's holding 33 again and again. So it's always stepping up that little bit. So there we go, up towards 37. It had a little push, gives you a chance then to look at that. It's pushed through 36. The fact it hasn't shot up is a reason to then go, okay, I can take 37. There's your quick scalp. Doesn't have to be any more than this. You've just taken 10 handles out of the trade. 10 handles is $500 per contract that you've taken on. And once you've got that second contract in, you're actually only looking at a risk of around about 2 handles, which is 100. So you've got a 5-to-1 risk reward on a trade that then rushes up. You're 6 minutes into the day, and you now sitting in a situation where we can now start to build from this. You're $1,000 up already, at least if you've done this with 2. And then you've got that scope, that money to play with, to play the next bit of the trade.